In 1999, if you had invested just $1,000 into a small, obscure chip company, you would today be holding more than $4.7 million. That company was not Apple, not Amazon, not Google. It was NVIDIA, what began as a scrappy startup. Trying to make video games look better has quietly transformed into one of the most valuable companies in human history, worth over $4 trillion by 2025. But this is not just a story about stock prices. It's a story about vision, risk, and timing. About how three engineers, with little more than conviction and desperation, bet on a technology no one else believed in, and in doing so, became the backbone of the artificial intelligence revolution. Today, NVIDIA doesn't just power video games. It powers the world's most advanced AI, from ChatGPT to self-driving cars, from scientific breakthroughs to entire digital universes. Oh, how did a failing graphics card company become the pickaxe seller in the greatest gold rush of the 21st century? And can it possibly hold on to its fragile crown at the very top of the world? The birth and vision, 1993 to 2005, that on a warm April morning in 1993, in a quiet office space in Santa Clara, three engineers sat around a table with a whiteboard full of sketches and numbers. They had no company yet, no funding lined up, and no certainty that their idea would succeed. What they did have was conviction, the sense that the personal computer was about to change forever. The men were Jensen Huang, Chris Malachowski, and Curtis Preem. Huang was in his early 30s, the son of Taiwanese immigrants, a chip designer with an intensity that bordered on intimidating. Malachowski, an engineer from Sun Microsystems, was pragmatic and steady. Preem, a specialist in computer architecture, brought deep technical brilliance. Together, they had been talking for months about an overlooked corner of computing, graphics. At the time, the industry revolved around the CPU, the central processing unit. Intel dominated, Microsoft was rising, and software revolutions were being built on the foundation of general-purpose processors. Graphics? That was mostly an afterthought. Computers could already render simple images and play primitive games. Why would the future depend on graphics? But Huang disagreed. He saw that as digital worlds became richer, as video games grew more complex, and as graphical interfaces defined how people interacted with machines, graphics would not be a side feature. They would be the heart of the experience. And so, with just $40,000 in starting capital, NVIDIA was born. The world they entered, the early 1990s, were not an easy time for startups. Silicon Valley was crowded with chip companies, many of them far larger and better funded. Giants like Intel, ATI, and Matrox had already staked their claim in graphics. Yet Huang's team believed they had something different: speed and adaptability. Where giants moved slowly, a small company could innovate. Their first product, launched in 1995, was the NV1. It was bold, too bold, perhaps. Unlike its rivals, which focused on rendering polygons as triangles, NVIDIA's NV1 tried to push quadrilateral primitives. Technically elegant, but strategically flawed. Microsoft had just committed to triangles with its direct 3D standard, and NVIDIA's first card looked like a bet on the wrong horse. The NV1 was a commercial disappointment. Many startups would have folded then. But Jensen Huang was not the kind of leader who gave up. He was relentless. Colleagues would later recall his fiery speeches, his insistence on impossible deadlines, his ability to convince teams to work through nights and weekends for a dream that still felt blurry. The breakthrough. GeForce 256 inches 1999. After several iterations and painful lessons, NVIDIA unveiled the GeForce 256. This was not just another graphics card. Huang insisted on branding it differently. Not a graphics accelerator, but the world's first GPU, graphics processing unit. The difference was profound. Unlike previous cards, the GeForce integrated transform and lighting directly onto the chip. This meant that for the first time, 3D rendering could be handled largely by the GPU, freeing the CPU and creating dramatically more realistic visuals. Gamers noticed instantly. Shadows, textures, movement. Everything felt richer, smoother, alive. The launch of the GeForce was more than a product release. It was a turning point. NVIDIA had gone from underdog to leader almost overnight. The company's market share surged, and competitors like 3DFX, once dominant, found themselves struggling. Within 2 years, NVIDIA would even acquire 3DFX's assets, consolidating its position. Going public the same year, 1999, NVIDIA went public. Its initial public offering, IPO, was priced at $12 per share. Few could have imagined that this stock, barely noticed among the dot-com frenzy, would one day become one of the most valuable assets on Wall Street. The timing was extraordinary. The late 1990s saw the explosion of personal computing, the spread of the internet, and the rise of a global gaming culture. Demand for graphics cards grew rapidly. NVIDIA's revenues, just $158 million in 1999, began climbing year after year. For the founders, the IPO was validation. They had survived the NV1 failure, built a revolutionary product, and now convinced investors that NVIDIA had a future. But even then, no one, not even Huang, could have predicted how big that future would be. Early culture. Fearless and ruthless inside NVIDIA, the culture was shaped by Huang's personality. He was demanding, impatient, and visionary. He famously carried around a whip, a literal riding crop, which he would slap on conference tables during meetings, half joking, half deadly serious. Employees recall the mixture of fear and admiration he inspired. This intensity pushed the company forward. In a market where competitors often released incremental updates, NVIDIA delivered leaps. New architectures, faster performance, more features. Each launch was marketed aggressively. Each setback treated as fuel for the next breakthrough. By the early 2000s, NVIDIA had become synonymous with cutting-edge graphics. Gamers wanted GeForce. Professionals in 3D modeling, design, and visualization relied on NVIDIA's Quadro line. The company was carving out multiple markets at once, all built on its GPU technology. Beyond graphics, a new idea even as NVIDIA dominated gaming, Huang was already thinking ahead. He asked a question that seemed eccentric at the time. Could GPUs do more than graphics? The answer would change the company's destiny. GPUs were massively parallel. Unlike CPUs, which executed a few instructions at high speed, GPUs could run thousands of simple operations at once. What if that power could be applied to physics simulations, whether models, molecular dynamics, or even artificial intelligence? In 2006, NVIDIA introduced CUDA, a software platform that allowed developers to program GPUs for general-purpose computing. It was a slow burn at first. Most industries didn't see the need. But some researchers, especially in universities, began experimenting. For them, CUDA was a revelation. Calculations that had taken days on CPUs could now be done in hours on GPUs. It would take nearly a decade for this idea to reach full impact. But CUDA laid the foundation for NVIDIA's transformation from a graphics company into something much bigger, the computational backbone of the AI revolution. Surviving the storms, the road wasn't smooth. In the mid-2000s, competition from ATI, later acquired by AMD, was fierce. Both companies pushed innovation in gaming graphics, releasing new chips in rapid cycles. For a time, it wasn't clear who would dominate, but NVIDIA had advantages: its software ecosystem, its aggressive execution, and Huang's relentless drive. It also diversified. The company moved into professional markets with Tesla accelerators, into mobile with Tegra chips, and into automotive computing. Not all of these bets succeeded, but they kept NVIDIA exploring beyond its core. By 2007, NVIDIA stock had split multiple times: 2, 4, 1 in 2000, 2001, and 2006, and 3, 4, 2 in 2007. These splits reflected growing investor confidence and a strategy to keep shares affordable. What had started as a $12 IPO stock was gradually compounding in value. Though few investors yet grasped how large the upside would become, a company to watch as the 2010s approached. NVIDIA stood as a respected leader in graphics and an intriguing player in high-performance computing. Its revenue was growing, its stock was stable, and its products were household names among gamers. Yet, to the broader world, NVIDIA was still just a chip company, a supplier of video cards. Behind the scenes, however, Jensen Huang was preparing for something bigger. The world was on the cusp of breakthroughs in machine learning. Data was exploding, algorithms were evolving, and computing needs were rising beyond what CPUs alone could handle. Huang's gamble on CUDA, years earlier dismissed as a side project, was about to pay off in ways no one had imagined. The GPU that ate the world, the by 2010. NVIDIA was already well known in the world of gaming. The company's GeForce line had become the gold standard for PC graphics. Each new release was awaited by millions of gamers worldwide. The market saw NVIDIA as a strong, innovative competitor, but still within the confines of entertainment hardware. What few outside observers understood was that NVIDIA was about to break free from those confines. The seeds had been planted years earlier, when Jensen Huang and his engineers had introduced CUDA. For a while, it seemed like little more than a curiosity. But slowly, and then suddenly, CUDA began to change everything. The CUDA bet. When NVIDIA released CUDA in 2006, most analysts shrugged. It was a toolkit for programmers to use GPUs for non-graphical computing tasks. At the time, CPUs still ruled the world of computing. Supercomputers, whether models, medical research, they were powered by rows of CPUs crunching data in parallel. But CUDA unlocked something different. A single GPU contained hundreds of small cores, each capable of executing instructions simultaneously. Unlike CPUs, which were designed for complex sequential logic, GPUs were built for throughput. If you could adapt your problem into thousands of parallel tasks, a GPU could devour it first. This was niche. Researchers in physics and molecular biology began using GPUs to accelerate their models. What used to take days now took hours. Grants and research papers began to mention CUDA-powered breakthroughs. A new community was forming around NVIDIA's technology. Huang saw what was happening. While investors still measured NVIDIA in terms of gaming revenue, he began repositioning the company. He spoke of GPUs not as graphics chips, but as engines of parallel computing. The world would not understand immediately, but when it did, NVIDIA would be ready. The AI awakening in 2012. A small team at the University of Toronto led by Geoffrey Hinton shocked the world of artificial intelligence. They entered the ImageNet competition, a massive contest to classify images, and crushed all rivals. Their system, called AlexNet, wasn't just a little better. It was dramatically better, and it had been trained on GPUs. The reason was simple. Deep learning required training neural networks with millions of parameters, a process that took prohibitive amounts of time on CPUs. GPUs, with their parallel structure, could accelerate training by an order of magnitude. Suddenly, CUDA was no longer an academic toy. It was the foundation of a revolution. From 2012 onward, the adoption curve was explosive. Research labs around the world scrambled to get their hands on NVIDIA GPUs. Companies like Google, Facebook, and Microsoft began building GPU clusters to accelerate their AI research. Every major advance in machine learning, from image recognition to natural language processing, was powered by NVIDIA silicon. From gaming to data centers, NVIDIA's business model began to shift. Gaming was still lucrative, but Huang knew the future lay elsewhere. Data centers. In 2007, NVIDIA had introduced the Tesla line of GPUs aimed at professional computing tasks. Initially, uptake was modest, but by the mid-2010s, Tesla cards became the backbone of AI training systems. Supercomputing centers integrated them by the thousands. Entire server racks were built around NVIDIA's architecture. This was not just a technical shift, but a financial one. A gaming GPU might sell for a few $100s. A data center GPU could sell for tens of thousands. And the demand was insatiable. NVIDIA began reporting data center revenue alongside gaming revenue in its financial statements. Investors started noticing. A company once pigeonholed as a gaming supplier was suddenly becoming indispensable to the most important computing revolution of the century. The rise in stock price. For years, NVIDIA's stock had been relatively modest. After its IPO in 1999 at $12 per share, adjusted for multiple splits, the stock traded mostly in the low double digits throughout the 2000s, but around 2015, as AI demand exploded, investors began to re-rate NVIDIA. The share price, which hovered around $20 in 2012, surged past $100 by 2016. By late 2018, it had touched $280, making NVIDIA one of the fastest-growing stocks in the tech sector. The rise was not smooth. In late 2018, A slump in cryptocurrency mining and a slowdown in gaming demand caused the stock to collapse by nearly 50%. For a brief moment, skeptics said NVIDIA had peaked, but Huang remained unfazed. He was already looking at the next frontier, deep learning at scale. The strategic acquisitions NVIDIA also began to expand strategically. In 2020, it announced its intent to acquire Mellanox Technologies for nearly $7 billion. Mellanox specialized in high-speed networking, critical for connecting GPUs in massive data centers. The acquisition was a masterstroke. NVIDIA wasn't just selling chips anymore. It was selling the backbone of AI infrastructure. The company also attempted to acquire ARM, a key designer of processor architecture, in a $40 billion deal. Though regulators eventually blocked it, the attempt signaled Huang's ambition. NVIDIA was no longer content being a component supplier. It wanted to control more of the computing stack. Gaming reinvented even as data centers became the engine of growth. NVIDIA never abandoned its gaming roots. In 2018, it released the RTX series, introducing real-time ray tracing, a holy grail of computer graphics. Ray tracing simulated light with unprecedented realism, creating lifelike shadows and reflections. Gamers marveled. Developers adapted. RTX became the new standard. It wasn't just a technical leap. It was a marketing triumph. NVIDIA managed to keep its dominance in gaming even while reinventing itself as a data center giant. Culture of relentless execution through the 2010s. NVIDIA's internal culture hardened into something unique. Employees spoke of Huang as both inspiring and terrifying. He demanded excellence, punished mediocrity, and pushed teams to think years ahead. He often described NVIDIA as a company that lived at the intersection of hardware and software. Most chip companies built silicon and left software to others. NVIDIA built both. The drivers, the CUDA toolkit, the libraries for AI and scientific computing all came under one roof. This gave them a lock-in effect. Once developers built on CUDA, they rarely switched. The result was an ecosystem that grew stronger with time. More researchers meant more software optimized for NVIDIA GPUs, which meant more demand for the hardware, which meant more incentive to keep innovating. A flywheel was in motion. The world takes notice. By the end of the 2010s, NVIDIA was no longer just a graphics company. It was the engine of artificial intelligence. Its GPUs powered everything from self-driving cars to voice assistants, from weather prediction to cutting-edge science, and Wall Street noticed. By early 2020, NVIDIA's market capitalization crossed $200 billion, a staggering number for a company once dismissed as a niche player. Yet, for all this success, the real explosion was still to come. The 2020s would bring generative AI, large language models, and a hunger for computational power so vast that even NVIDIA's boldest projections would be shattered. The AI gold rush to in late 2022. A product called ChatGPT stunned the world. Built on OpenAI's GPT 3.5 and later GPT-4 models, it seemed almost magical. A computer that could converse, write, translate, even code. Suddenly, artificial intelligence was not some distant research field. It was on everyone's laptop, in everyone's news feed. Behind the scenes, powering the training of those vast models, were NVIDIA GPUs. Data centers filled with racks of NVIDIA's A100 chips had become the beating heart of the AI revolution. The release of ChatGPT was not just an event in software. It was the spark that lit NVIDIA's rocket. Demand without precedent. Generative AI required unimaginable computational resources. Training a large language model could cost tens or even hundreds of millions of dollars, with weeks of non-stop GPU time. Suddenly, every tech giant, Microsoft, Google, Amazon, Meta, needed tens of thousands of NVIDIA chips. In 2020, NVIDIA had already introduced the A100, a data center GPU built on the Ampere architecture. It was powerful, efficient, and optimized for AI. By 2022, supply was so tight that A100s were selling on secondary markets for twice their retail price. Then came the H100, based on the Hopper architecture, announced in 2022 and shipping in 2023. With its transformer engine, specifically designed for AI workloads, the H100 became the most coveted piece of silicon on the planet. Tech journalists began calling it the pickaxe of the AI gold rush. Financial explosion, the numbers were staggering. In fiscal year 2023, NVIDIA reported around $27 billion in revenue. By fiscal year 2024, that figure more than doubled to $60.90 billion. By fiscal year 2025, revenue had exploded again, reaching roughly $130.5 billion, with over $95 billion of that coming directly from data center sales. No chip company in history had ever grown so fast. On Wall Street, investors could hardly believe it. In May 2023, NVIDIA's market capitalization crossed the once unthinkable threshold of $1 trillion. Just a year later, by mid-2024, it had soared past $3 trillion, making NVIDIA more valuable than Amazon, Meta, or even Alphabet. By September 2025, it hovered around $4.27 trillion, vying with Apple and Microsoft for the title of the most valuable company on Earth. The stock price journey, the stock told the story even more vividly. 1999 IPO, $12 per share. 2012, trading around $20. Relatively obscure. 2016, past $100. As AI adoption accelerated. 2018, near $280 before a sharp correction. 2020, around $500 pre-split. 2021, NVIDIA announced a 4-for-1 stock split, making shares more accessible. 2023, fueled by the AI boom, shares surged past $400, split adjusted. September 2025, the adjusted closing price sits around $176.60. After another cycle of volatility and adjustments, with a 52-week high of $184. What mattered most was not the absolute number, but the wealth created. Analysts calculated that $1,000 invested at the IPO, with all splits and adjustments, would now be worth over $4.7 million. Few stocks in history had produced such returns. Beyond chips, building an AI platform, Jensen Huang knew better than anyone that hardware alone wasn't enough. To maintain dominance, NVIDIA needed to control the software stack too. The company expanded its CUDA ecosystem with specialized libraries for AI, like CUDA, optimized for deep learning frameworks such as TensorFlow and PyTorch. It launched NVIDIA DGX systems, turnkey AI supercomputers built entirely around its GPUs. And in 2023, it introduced NVIDIA AI Enterprise, a suite of tools and optimizations designed to make its hardware the default platform for enterprise AI. The strategy was clear: make it almost impossible for researchers or corporations to do AI without NVIDIA. Once a model was written for CUDA and CUDA, porting it elsewhere was painful. Huang wasn't just selling chips, he was selling lock-in. The Mellanox payoff, the $7 billion acquisition of Mellanox Technologies, completed in 2020, proved visionary. As data centers demanded ever larger GPU clusters, the bottleneck wasn't just processing power, but networking bandwidth. Mellanox's high-speed InfiniBand interconnects allowed thousands of GPUs to function as one giant supercomputer. By 2024, NVIDIA wasn't merely a chipmaker. It was the architect of entire AI factories. A single AI training cluster could cost a customer hundreds of millions of dollars, and NVIDIA supplied the critical components. Jensen Huang, from engineer to icon, as NVIDIA's valuation soared. So did the legend of its CEO. Jensen Huang, always known for his leather jackets and intensity, became a cult figure in Silicon Valley. To investors, he was a genius who had bet on CUDA before anyone saw its potential. To researchers, he was the man who gave them the tools to push the boundaries of knowledge. He cultivated the image carefully, part visionary, part ruthless operator. In interviews, he spoke of NVIDIA as a full-stack computing company, one that built not only chips, but also software, systems, and ecosystems. His message was clear: NVIDIA was not a component supplier anymore. It was the backbone of the AI economy. Competition and risks. The meteoric rise did not come without enemies. AMD continued to fight in gaming and attempted to challenge NVIDIA in AI accelerators. Intel invested billions in its own GPU and AI chip lines. Though with limited success, startups like Cerebras, GraphCore, and Sambanova tried to build specialized AI chips. Even Google, with its tensor processing units, TPUs, sought to reduce dependence on NVIDIA. Yet none could match the scale of NVIDIA's ecosystem. CUDA had become so entrenched, and the H100 so dominant, that competitors were often relegated to niche markets. Still, risks loomed. U.S. export controls restricted NVIDIA from selling its most advanced chips to China, cutting off a huge market. Manufacturing bottlenecks at TSMC, the Taiwanese foundry producing NVIDIA's chips, left the company vulnerable to geopolitical tensions. And above all, the stock's sky-high valuation created expectations that even NVIDIA might struggle to meet. The pickaxe of the new gold rush investors and analysts reached for metaphors. Some compared NVIDIA to Intel in the 1990s, the undisputed king of the microprocessor. Others said it was like Standard Oil at the height of industrialization, the indispensable supplier of the new fuel, computation. But the most common metaphor was that of the pickaxe seller in a gold rush. Just as Levi Strauss had grown rich selling jeans to miners, NVIDIA was getting rich supplying GPUs to AI prospectors. Every company chasing AI needed NVIDIA. Whether or not they struck gold, that by the mid-2020s, NVIDIA had achieved what once seemed impossible. A company that began as a scrappy graphics startup had become one of the most valuable corporations in human history. Its GPUs were no longer just about pixels on a screen. They were about intelligence itself, the engines of a new industrial revolution. But the question remained, could NVIDIA hold on to its crown? Would competitors, regulators, or market forces eventually catch up? Or was the company destined to remain the indispensable backbone of AI for decades to come? Challenges at the summit. By September 2025, NVIDIA stood at the peak of the corporate world. Its market capitalization hovered around $4.27 trillion, a number so large that only Apple and Microsoft could claim to be peers. It had become a symbol of the AI revolution, the supplier of the most important chips on Earth. But towering heights bring dangerous winds. And as Jensen Huang knew all too well, the higher you climb, the more people want to see you fall. The geopolitical trap. NVIDIA's chips were born of global cooperation. Designs in California. Fabrication in Taiwan by TSMC. Raw materials sourced worldwide. Distribution networks spanning continents. It was a marvel of globalization, and also a vulnerability. The most pressing risk was China. For years, Chinese tech giants had been among NVIDIA's biggest customers. Companies like Alibaba, Tencent, and Baidu had bought thousands of NVIDIA GPUs to power their cloud services and AI labs. But in 2023, the U.S. government imposed sweeping export controls, banning NVIDIA from selling its most advanced chips, like the H100, to China. For NVIDIA, the ban cut off billions in potential revenue. But for Washington, the logic was clear. Advanced AI was now a matter of national security. America could not allow its geopolitical rival to train the most powerful models with American chips. Jensen Huang responded diplomatically, describing China as an important market and warning that restrictions could hurt U.S. companies more than they helped. But the reality was harsh. NVIDIA was now caught in the middle of a new Cold War over technology. Its crown jewels, GPUs, had become strategic assets. The manufacturing bottleneck. Another challenge came from manufacturing. NVIDIA did not own its factories. Its most advanced chips were produced by TSMC in Taiwan, the world's leading semiconductor foundry. This reliance was efficient, but precarious. Taiwan sat at the epicenter of rising tensions between the U.S. and China. Any conflict across the Taiwan Strait would disrupt the global semiconductor supply chain overnight. For NVIDIA, the risks were existential. If TSMC's fabs were compromised, the company could not deliver H100s, H200s, or any of its future architectures. Wall Street analysts began warning of a Taiwan premium, a hidden geopolitical risk baked into NVIDIA's trillion-dollar valuation. Huang tried to mitigate this by diversifying. NVIDIA partnered with TSMC's new fabs in Arizona and explored alternative suppliers like Samsung. But the transition would take years. For now, the world's most valuable chip company was still dependent on a narrow strip of land in East Asia. Competitors on the horizon. NVIDIA's dominance seemed unshakable. But rivals were circling. That AMD had found success with its MI300 accelerators. offering competitive performance in some AI workloads. Though still smaller in market share, AMD's partnership with Microsoft and other cloud providers made it a credible challenger. Intel, long written off in the GPU race, was investing billions in AI accelerators and fabs, betting that vertical integration could one day give it an edge. Google continued to refine its TPUs, tensor processing units, using them to train its largest AI models and renting them through Google Cloud. Amazon developed its own Trainium and Inferentia chips, designed to reduce reliance on NVIDIA for training and inference. Dozens of startups, Cerebras, Sambanova, Graphcore, chased niches with exotic architectures. From wafer-scale engines to neuromorphic designs, each rival faced steep uphill battles against NVIDIA's CUDA ecosystem. But history offered a warning. Even titans can fall when a new paradigm emerges. The valuation question, perhaps the most dangerous threat, wasn't external at all, but internal. The expectations of the market. By 2025, NVIDIA's valuation implied endless growth. Investors believed the AI revolution would keep accelerating, that demand for GPUs would remain insatiable, that NVIDIA's margins would stay sky-high. But what if the growth slowed? What if AI hype cooled? Already, some analysts were warning of a bubble. Startups were spending billions on GPUs without clear paths to profitability. Governments were questioning the energy demands of massive AI training clusters. A backlash was brewing. For NVIDIA, a stumble in earnings could wipe hundreds of billions from its valuation overnight. The higher the stock price climbed, the thinner the margin for error. The energy dilemma there was also the question of power, not political, but electrical. Training state-of-the-art AI models consumed staggering amounts of energy. Data centers packed with NVIDIA GPUs devoured megawatts, straining power grids and sparking debates about sustainability. Environmental groups began to ask whether the AI boom was compatible with climate goals. Politicians echoed these concerns, threatening regulation or new energy taxes. If GPUs became associated not with progress, but with waste, NVIDIA's brand could suffer. Jensen Huang, ever the pragmatist, began to address the issue in keynotes. He emphasized energy efficiency improvements in each new architecture and spoke about AI's potential to accelerate climate research, drug discovery, and renewable energy design. But the debate was just beginning. Cultural and internal pressures inside NVIDIA, growth brought its own challenges. The company had expanded from a few thousand employees to more than 25,000 worldwide. Scaling culture was difficult. Stories of Huang's legendary intensity, the leather jacket, the whip on the table, turned from folklore into corporate myth. Some employees thrived in the high-pressure environment, but others burned out. Recruiting top AI talent became harder as tech giants competed with massive salaries and stock options. NVIDIA, once the underdog, was now the establishment. And establishments attract both loyalty and resentment. The fragile crown despite all these pressures. NVIDIA's grip on the AI market remained firm in 2025. Its GPUs powered nearly every major AI lab. Its revenue growth dwarfed rivals. Its valuation placed it among the gods of Wall Street. Yet Huang was no stranger to the fragility of dominance. He had seen 3DFX collapse, ATI swallowed by AMD, Intel stumble from its perch. In technology, no advantage lasts forever. To stay ahead, NVIDIA had to keep innovating, not just in chips, but in software, networking, and entire AI systems. The question was whether it could move fast enough while carrying the weight of being one of the world's most valuable companies. NVIDIA in 2025 was not the same scrappy startup of 1993, nor the plucky GPU vendor of 1999, nor even the AI darling of 2016. It was now a geopolitical asset, a financial colossus, and a symbol of the AI age. But at its heart, it was still a company built on risk, a bet that GPUs could change the world. That bet had paid off beyond imagination. Whether it would continue to pay off was no longer a technical question. It was a question of politics, economics, and the limits of global ambition. Building the future beyond chips. In the fall of 2025, Jensen Huang stood on stage at NVIDIA's annual GTC conference, wearing his signature black leather jacket. The crowd, a mix of engineers, investors, and journalists, waited for him to unveil the company's next vision. For years, GTC had been the stage where NVIDIA introduced its boldest innovations. CUDA in 2006, ray tracing in 2018, the A100 in 2020, the H100 in 2022. Each announcement had reshaped entire industries. Now, as NVIDIA's valuation brushed $4.3 trillion, Huang faced a new challenge, proving that the company's future wasn't just about chips, but about everything that comes after them. The next architecture, Blackwell and beyond. The most immediate way NVIDIA defended its lead was through relentless innovation in hardware. Each generation of GPUs was not just faster, but designed with new paradigms in mind. In 2024, NVIDIA unveiled its Blackwell architecture, successor to Hopper. Named after mathematician David Blackwell, it introduced more efficient transformer engines, memory improvements, and interconnects capable of linking hundreds of thousands of GPUs together. The message was clear: NVIDIA wasn't just building chips. It was building AI supercomputers at planetary scale. Rumors were already swirling about what would follow Blackwell, codenamed Rubin. Each new step seemed to widen the gap with rivals. But Huang knew that raw performance wasn't enough anymore. The real battle would be fought in software and platforms. Owning the AI software stack from the beginning, NVIDIA had paired its hardware with software. CUDA was the first brick, followed by libraries like CUDA for deep learning and TensorRT for inference optimization. By 2025, this ecosystem had grown into something immense. NVIDIA AI Enterprise, a suite that touched nearly every layer of AI development. The strategy was deliberate. Just as Microsoft once dominated PCs through Windows, NVIDIA aimed to dominate AI through CUDA and its surrounding ecosystem. A researcher who trained a model on CUDA rarely moved to another platform. The switching costs were too high. NVIDIA also expanded into frameworks and services. It launched NVIDIA Nemo, a toolkit for building large language models, and Omniverse, a platform for digital twins and 3D collaboration. These weren't side projects. They were part of Huang's plan to make NVIDIA the operating system of the AI era. From hardware to services, one of the most significant shifts was NVIDIA's move into services. Selling chips was profitable, but cyclical. Selling access to AI computing as a subscription, however, could generate steady, recurring revenue. In 2023, NVIDIA announced partnerships with major cloud providers to offer DGX Cloud, essentially renting NVIDIA's AI supercomputers by the hour. For startups and researchers, it was cheaper than building their own clusters. For NVIDIA, it meant monetizing its hardware even after selling it to partners. By 2025, DGX Cloud had grown into a billion-dollar business. Customers could spin up thousands of H100 or Blackwell GPUs on demand, paying NVIDIA directly. Huang often described this as the company's future: AI infrastructure as a service, delivered not just through chips, but through the cloud. Battling big tech, this strategy, however, brought NVIDIA into direct conflict with its biggest customers. Microsoft, Google, Amazon all relied on NVIDIA GPUs to power their clouds. But they also resented being dependent on a supplier. Each invested heavily in building its own AI chips: Microsoft with Athena, Google with TPUs, Amazon with Trainium. Their goal was simple: reduce reliance on NVIDIA, cut costs, and control their own destinies. Huang played a delicate game. On one hand, he sold them chips and partnerships. On the other, he competed with them through DGX Cloud. Some analysts called it a frenemy relationship, a balancing act between cooperation and competition. The question was whether NVIDIA could grow its services business without alienating the very giants that made it so valuable in the first place, expanding into new frontiers even as AI dominated headlines. NVIDIA looked for the next wave of opportunity. Automotive. NVIDIA's Drive platform supplied chips and AI software for self-driving cars, partnering with companies like Mercedes-Benz and Volvo. While full autonomy remained elusive, NVIDIA positioned itself as the brain of future vehicles. Healthcare. NVIDIA's Clara platform applied AI to drug discovery, genomics, and medical imaging. By 2025, several pharmaceutical breakthroughs had been accelerated by GPU-optimized simulations, digital twins. With Omniverse, NVIDIA aimed to simulate entire factories, cities, even economies in real time. This vision of industrial metaverse promised efficiency gains that could reshape global supply chains. These ventures were not yet as profitable as data centers, but they showcased NVIDIA's ambition to embed itself into every sector touched by AI. The cult of Jensen at the center of it all remained Jensen Huang. By 2025, he was more than a CEO. He was a symbol. Magazine covers described him as the Steve Jobs of AI. At conferences, audiences cheered his leather-jacketed keynotes like rock concerts. To NVIDIA's employees, he was both a source of inspiration and pressure, a leader who demanded excellence at all costs. Huang cultivated this image carefully. He spoke of NVIDIA as a company that thrived by betting early and betting big. He reminded audiences that CUDA had once seemed irrelevant, and now it was indispensable. His message was simple: trust him, because NVIDIA always played the long game. But even legends have limits. At 62, Huang faced questions about succession. Could anyone else lead NVIDIA with the same mix of vision and ruthlessness? Investors whispered about the Huang premium, the idea that much of NVIDIA's value was tied not just to its products, but to the man himself, risks of overreach despite its dominance. NVIDIA faced the danger of stretching too far. Regulatory scrutiny. Governments in the US and Europe began investigating NVIDIA for potential monopolistic practices. If CUDA was truly indispensable, was it anti-competitive? Market saturation. Analysts warned that AI infrastructure spending might eventually slow. Companies were buying GPUs at breakneck pace, but how much capacity would they truly need? Technological disruption. Startups continued to experiment with alternatives: optical computing, neuromorphic chips, quantum accelerators. A breakthrough could shift the paradigm overnight. NVIDIA's challenge was not just to grow, but to defend its moat in an industry where moats rarely lasted long. The future horizon as 2025 drew to a close, NVIDIA stood at a crossroads. It was no longer just a chip company, nor merely a supplier to big tech. It was the backbone of AI, the architect of digital twins, the enabler of autonomous systems. But the higher it climbed, the more precarious the balance became. Could NVIDIA evolve into a platform company with recurring revenues and global reach without triggering backlash from customers and regulators? Could it maintain innovation while managing the weight of being one of the world's most valuable corporations? Jensen Huang, for his part, seemed unfazed. At GTC, he closed his keynote with a line that echoed in headlines: "We are no longer just building chips. We are building the future of intelligence itself." Legacy and the road ahead. On the surface, NVIDIA's story is about chips, transistors, architectures, benchmarks, and stock prices. But beneath that surface, it is something deeper, a story about how one company, through persistence and vision, reshaped the trajectory of technology and, by extension, the modern world. From a modest startup in 1993 to a $4.3 trillion titan in 2025, NVIDIA did more than sell GPUs. It redefined what computers could do, what industries could build, and what societies could imagine. And now, at the height of its power, it faced the challenge of transforming that legacy into something enduring. How NVIDIA changed the world looking back. 3 transformations stand out. Gaming into realism. NVIDIA's GeForce line changed video games forever. Real-time 3D graphics, ray tracing, and photorealistic rendering turned virtual worlds into living environments. The entertainment industry, from games to film, was reshaped by GPU technology. Computing into parallelism. With CUDA, NVIDIA unlocked the true potential of parallel computing. Problems once considered impossible, protein folding, weather simulations, astrophysics modeling, became solvable at scale. Supercomputers worldwide leaned on NVIDIA GPUs as their engines. AI into reality. Perhaps most profoundly, NVIDIA turned artificial intelligence from theory into practice. Large language models, generative AI, autonomous driving, medical breakthroughs, all were accelerated by GPUs. Without NVIDIA, the AI revolution might have been delayed by years, even decades. The wealth machine NVIDIA also became one of the greatest wealth creation stories in corporate history. A $1,000 investment at its 1999 IPO had ballooned into over $4.7 million by 2025. Adjusted for stock splits, Market capitalization soared from under $1 billion at its IPO to more than $4 trillion. Entire industries, gaming, cloud computing, autonomous vehicles, biotech, grew richer simply by building atop NVIDIA's platforms. For Wall Street, NVIDIA was not just a stock. It was a symbol of the AI age, as iconic in the 2020s as Apple was in the 2010s or Microsoft in the 1990s that the dual identity what made NVIDIA unique was its dual identity. It was both a hardware company and a software company, both a supplier and an ecosystem leader. Few companies managed such balance. Intel had dominated chips, but failed in software. Microsoft had dominated software, but failed in hardware. NVIDIA straddled both worlds, and it gave the company an outsized influence. CUDA, DGX, Omniverse. These were not add-ons. They were extensions of a strategy to ensure that anyone who needed computation, graphics, or intelligence would, by default, choose NVIDIA. The shadow of risk still, even legends carry shadows. Overdependence on AI hype. If the frenzy cooled. If enterprises failed to monetize their massive GPU investments. NVIDIA's growth could falter. Geopolitical fragility. With fabrication tied to Taiwan and restrictions on China, the company walked a tightrope of global politics. Environmental impact. The energy cost of massive GPU clusters sparked debates about sustainability, pushing NVIDIA to prove that AI could serve climate solutions as well as consume power. Succession uncertainty. With Jensen Huang at the helm for more than 30 years, questions about leadership loomed. Would NVIDIA thrive without him? History was full of fallen giants. IBM, once unassailable, now a shadow of its past. Intel, once the king of semiconductors, struggling to regain footing. Could NVIDIA avoid their fate? Possible futures from the vantage point of 2025, several scenarios emerged for NVIDIA's future. The AI empire NVIDIA continues to dominate. Its GPUs remain indispensable. Its services grow into multi-billion-dollar recurring businesses, and it cements itself as the backbone of global intelligence infrastructure. In this future, NVIDIA could surpass even Apple and Microsoft, becoming the most valuable company in history. The platform challenger big tech rivals succeed in building viable alternatives. Google's TPUs, Microsoft's Athena, Amazon's Trainium eat into NVIDIA's dominance. NVIDIA remains strong but loses its monopoly aura, becoming one powerful player among many. The disruption shock a breakthrough, quantum computing, neuromorphic chips, optical processors, renders traditional GPUs less central. NVIDIA, tied to its architecture, struggles to adapt. Its fall echoes Intel's decline in the age of mobile. The regulated titan governments impose strict controls on AI hardware and software, limiting NVIDIA's ability to sell freely. Forced to split businesses or license CUDA, it survives but loses some of its control. The legacy of Jensen Huang. Whatever happens, Jensen Huang's legacy is already secured. He took a failing graphics startup and turned it into one of the world's most valuable enterprises. He saw possibilities in parallel computing when others dismissed them. He bet on AI before it was fashionable. And he built not just products, but an entire ecosystem that defined the trajectory of technology. He is a ruthless capitalist, squeezing competitors and locking in customers. To others, he is a visionary who gave humanity tools to leap forward. Both can be true. The closing image in the grand arc of technological history. NVIDIA is a reminder of how small bets can change the world. 3 engineers in a Santa Clara office sketched an idea in 1993. 30 years later, that idea had reshaped science, business, and society itself. As Jensen Huang often said in his keynotes, "We are living in the next industrial revolution." For now, NVIDIA is its central engine. Whether it remains so, or whether the torch will pass, remains to be seen. But one thing is certain: the story of NVIDIA is not just about a company. It is about the human drive to imagine, to compute, and to create intelligence itself.